Hello and welcome to Crypto Weeklies. In this video, we are going to discuss the relative performance of the crypto asset class. None of the content is financial advice. The chart that you are seeing on the screen is the crypto heat map available for free along with all of the other analytics and the machine learning based indicator on cryptoweeklies.com. This website is personally developed by me and all of the content is generated using machine learning advanced techniques and statistical models and also data science based techniques. So let's get started with the heat map. This is again price analysis of top crypto assets across multiple cycles by market cap and also their relative performance amongst each other as a barometer. Over the last 24 hours, all of the cryptos of the top 50 are down over the last 7 days as well. Over the last 30 days, apart from a couple of cryptos over here, all of the rest of the asset classes is in a downtrend. Also, over the last 90 days, with these two names as exception, the Maker and XMR, all of the other major cryptos are trending lower than the previous 90-day price. Right now, the price of Bitcoin and ETH, ETH is at around 2,700, roughly speaking. Bitcoin at around 84K. It's in a free fall as described in our yesterday's video. You can check all of these videos also from the website right here. The YouTube channel is connected via that URL. You can see the from the Bitcoin battle for the bull run video. The next target for BTC again at around 79K, roughly speaking. That area, if that holds as support, that would be a key area to look for. Right now the price is at around $84,000, ETH at around $2,700, coming back to their dip buying opportunity. From a dip buying opportunity perspective, their SMA risk, if it's low enough for any DCA, again not financial advice, but historically speaking, whenever Bitcoin and ETH on their 20-week simple moving average price based risk are lower than 0.2, that is in this green band over here, historically speaking, those are have been great accumulation time periods for both Bitcoin and ETH. Right now, BTC is at around, from its 20 weeks simple moving average perspective, time adjusted and volatility adjusted perspective, BTC is at around rounded off at around zero risk. That means from the 20-week simple moving average price, divergence between the price and the 20-week simple moving average price. This has been, again, now the 20-week simple moving averages are all prices at around $112,000. Bitcoin is at around $83,000 or $84,000. So about $26,000 gap between over $26,000 gap between the 20-week simple moving average and the current price. And in terms of that proportion, that $26,000 as a over this $80,000 Bitcoin is more than 1/5 or more than 25% distance away from the 20-week simple moving average. This can be illustrated by the arrow. If you look at the base of the arrow near the current price and the 20-week simple moving average, about 32% gap between them. So in terms of percentage, there might have been more severe drops in the last bull run when the price did go slightly more lower than the 20-week moving average in terms of percentage. But if you account for the raw numbers as well as percentage together, this drop in terms of raw numbers would be higher, because again price of Bitcoin is higher, and in terms of the SMA model, which is trend on not just the proportional but also the time adjusted and volatility adjusted and base effect are also incorporated in this normalized model. That's the reason why, again, the risk for accumulating Bitcoin at this point per this model, that we just looks at the price and the 20-week simple moving average of BTC at that point. This orange color is for BTC, blue is for ETH. This model says that right now price is in a downtrend, and the SMA risk is again never zero but can be rounded off to zero. Similar story for ETH. Now ETH is also in this 0.13 risk from its 20-week simple moving average. I think the price for ETH is also right now on its free fall from the 20-week simple moving average, which is at around $4,000 roughly speaking, and the price is lower than not just the 20 weeks but also 50-week simple moving average now, that the price is below $3,100. If you were to check the delta between the price and the 20-week simple moving average for ETH is at around 45%. So in terms of percentage, ETH has dropped a lot from its 20-week simple moving average, but historically speaking, that is still within the realms of what ETH used to do historically. That's why the risk with ETH is accumulation is higher than with BTC accumulation at this point. Coming to the analysis of the ROI from the cycle, from the yearly open, BTC is down 8% from the yearly open. Right now, ETH is down 15% from the yearly open. Again, as we move towards the end of 2025, this again has been a different post-halving year for BTC and also for ETH, for that matter, from compared to 2021. In 2021, the lowest ETH went in terms of the lowest Bitcoin went from, in terms of the yearly open till the end of year, price performance was up by about 1.5% from the yearly open, whereas this time BTC has been again flirting couple of times where the BTC had gone negative, first in late March, early April 2025, and again second time in November time, whereas those periods in 2021 were where Bitcoin rallied the most. If you overlay that, in 2021, during that April May time period, BTC was up 119%, 116%, and also in November it was up 130% in 2021, whereas in 2025 in November it's down, BTC is down 8.5% roughly speaking. Coming to the same analysis for ETH in 2021, again ETH had a fantastic 2021, up in May 470% and in November 550%, whereas this time around ETH in April time period, the same time period, April May time period, was negative 45%, and again in November it's doing slightly better but still negative 15%. So that's the ROI side of things, and something to look forward to in terms of Bitcoin and ETH can be established by on their price on their regression based. This is linear regression based fair value, not the usual polynomial regression that we covered on our channel. But for ETH and BTC at a daily level, we can as they are older cryptos, we can analyze their linear regression based fair value and also account for tuning out some of the noise with the hypothesis that Bitcoin and ETH are more likely to stay active and despite the bearish downturn would have a meaningful presence in the asset class as a whole, as both Bitcoin and ETH together hold somewhere between 70 to 80% of the total market share. You can check it out over here. Bitcoin is right now about 60% of the asset class, ETH about 10%, so about 20%, sorry, about 70% together is Bitcoin plus ETH. Everything else is roughly speaking 30%. So the fair value for BTC per this linear regression is 76k. That could be a place where BTC could stall and garner some support like it did back in early part of 2025 when the price came close to this line. Back then the line was at around 71k. Price stopped garnered support at around 76k, about 5k above. But this time around 76k and 83k, it's about $7,000 gap between them. So let's see if this is a good support level. The peak regression for BTC, again, as it relates to this cycle, was always at around somewhere less than 200k per this regression model. And again, if you see the distance between the eventual peak and this dotted red line has gone down quite a bit. So this time around there was a good chance that price tops before the price reaches the dotted red line. So that was always the hypothesis. The bottom regression, again, Bitcoin never reaches the bottom regression line. If it were to reach this time, that would be again different or dissimilar to what Bitcoin has done since 2014. Whenever the price comes close to this on this linear regression chart, if you were to only DCA BTC when the price risk is in less than 20%, again, that is a clear accumulation zone, historically speaking. That has not materialized yet, but that is something to look forward to in bear market of 2026. Again, all of these charts are updated daily to account for the dynamicness of the market and account for that dynamic change in the price action. These are live models. They are not retroactively fitted to again, and are not judged by the latest performance alone, but overall more than 11 years price history of BTC. Same goes for ETH. Slightly less history for ETH, but still the starting with 2017, the linear regression based valuation for ETH comes at around fair value at around $4,100. Price is below the fair value. That's because, again, the ETH is slightly newer compared to Bitcoin, started sometime in 2015. This model considers price action since 2017 for ETH to come up with a fair value. Again, the bottom regression line again for ETH is again out of the scope. And the topping pattern for ETH this time around was 13K, but price never came close to this one. The time weighted average price based analysis for ETH helped identify when the price was in a downturn 3 times in the bear market of this cycle. First in June 2022, then again in November 2022, and third the bearish phase in April of 2025. And the price in these three distinct times per this time weighted average price model, the model did identify those times in the market where the asset was in an accumulation trend. This price action, as it blossoms towards the middle part of 2026, the price could well be lower than the time weighted average price at that point. If you were to extrapolate that with some flexibility, the price and the time weighted average price could meet somewhere close to the 2K level, depending on how ETH goes to 2K, if it has one more pump in December, early January 2025. Coming to the longer term CAGR model, that is the retirement model on Bitcoin and ETH. Starting with Bitcoin, now that we are coming to the close of the post-halving year of 2025, the price unfortunately in this year did not go to the bull case or the uber bull case, but came close or was at a midpoint of the bear case and the base case, where the top for BTC could have been close to 140K. If let's say if we go by the bear case scenario with some degree of toggling between the model, let's say the price peaked at around 120K, depending on 125K, that is depending on what happens in the bear market of 2026. The price could easily, per that hypothesis, that in the non bear market year, that is 3 out of 4 years, if the price were to grow annually 15%, then the decline in the bear market year would be about 20%. But again, this time around 3 out of the 4 years for Bitcoin, if you were to measure it from the yearly ROI since 2022, since 2023, the 3 years, first year, let's call this year 1, BTC was up 150%. In 2024, BTC was up 109%. And in 2025 thus far, it's negative 8%. But still, if you take an average of the 3 years performance, 150 plus 110, that's about 260, and then negative 10 to 20, that's 240. Dividing by 3, its CAGR has been at around 80%. Just a rough calculation. So we are also somewhere in this uber bull case, so even higher than that. So the decline in bear market of 2026 could be somewhere close to 50%. um, uh, that's again depends on when Bitcoin tops and what's the price action at end of December of 2025. Nonetheless, if we were to tune out the noise and stick with a model um, with a bear case of about 40-45% from the yearly close, let's say at around 75k, a 40% drop from 75k from let's say from here, from this line of support, if Bitcoin were to drop in 2026 by about 40-45%, the price of BTC could be somewhere close to that 42k to 43k in 2026. So that's one way to predict what Bitcoin could do. Again, in terms of the last market cycle, from the peak to the bottom, from 69k to the bottom of about 15,500, the drop was about 77%. So this time around, as the performance from the bottom to the peak is diminished, if you look for the performance from the bottom, that is in March 2020, or let's say even go further in December 2018, from peak to bottom Bitcoin was up about 2200%, whereas this time around, from peak to bottom thus far, Bitcoin has gone only 700%. So a drop of about 3x in the bottom to peak performance. Again, if we account for that and say that in the bear market the decline could be somewhere between 50 to 50, 45% to 55%. The 45% is the top of the channel at around $42,000 for Bitcoin. The 55% would be at around 35k. So somewhere between 35k to 42k is again what the historical data suggests Bitcoin could do in 2026. And with that, again, coming back to the model again, right now, this model considers a base price of 2025 somewhere at around $118,000, whereas the reality for 2025 has been a little different. That's because, again, all of the models tend to look at the latest price action and try to forecast based on what's the ground reality. This model was created in 2024. Back then, towards the end of the year, Bitcoin price action towards the end of 2024, early 2025 was close to this area over here at around 94k. So estimating an 8% return in the post-halving year was not too outlandish when this model was developed over here, when the price was around in the 90k range. So 2025 has been a lot different from other post-halving years for Bitcoin. So that could also mean that 2026 would be different compared to other bear market years for Bitcoin as well. And with that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye-bye.